Hello guys, welcome back to another video today. We're going to go through our normal tape reading sessions. It's the 8th of December, so Monday, no news Monday. Yeah, let's go through it today. It's going to be a quick one. It's my dad's birthday today, so I want to keep this fairly quick. So obviously, first thing I do when market opens, market first presented fair value gap when that occurs, and then the opening range gap. Got a small opening range gap for a Monday today, so we've got open here. So that's our opening range gap higher. And then just in line with the opening range gap low here, in the spread where my cursor is, where we closed at 414 on Friday. So not the biggest opening range gap, but it's a discounted opening range gap because we opened above where the opening range gap was, and then we obviously drew towards it. But yeah, as you can see, we opened up higher, and then we inversed the first fair value gap, drew back towards it. Can you see here, look, if we're going to inverse this, you want the bodies to completely close beneath the midpoint of that, and that's what we do. And as you can see from there, we just send price lower. Where do we draw towards? The midpoint in the opening range gap. And we've got some key levels down here. We've got the new week opening gap of today, which is the 8th, and then we've got um, Friday's first present fair value gap, and then the Thursday's higher key level, which we draw towards. But yeah, as you can see, look, just displaced down. But a look at the wick, look, completely fills Friday's first presented fair value gap, and we just flitter around. But yeah, opening range gap mid upper quadrant gets whipped through, shit ourselves back to the downside. We just continue to move down. There's not really many sort of relative equal lows in line with these key levels, so if that was me, I'm sort of hands off today and just letting price do its thing. But could have caught a move back down. Where do we draw towards? We've got Thursday's first fair value gap and all. Draw towards that, rebalance, and then look at this, just straight back to Wednesday's higher. Key level marked out. So when you mark these out, you've got to extend it all the way. You don't want to just have a sort of key level marked out to just for like a day or so. We want it in the previous 3 days because, as you can see, the algorithm just draws towards that. And again, here, look, Sibby in line with this key level, draw towards, brush shits itself, takes the next low. Look at that, look, wick, wick straight to the new day opening gap higher. Oh, and then where do we draw towards? New opening gaps down here. Got this one. Then we flitter about, back up to the first presented fair value gap in the fourth. Flitter about. Chop, chop. Look at that wick within the 11:53 macro where my cursor is. Midpoint of that. Flitter about. Displace lower. Back to the opening gap down here. Flitter about. Look at the bodies of these candles. All that. Look. This one. 12:08 within the lunchtime macro. New opening gap low. Flitter about. Just misses the high. This new opening gap. Closes above. Closes on the new opening gap with the fifth. High. Left down. Takes the new low. Flits about. Taps this higher. Then we just move up higher. Back towards Wednesday's higher. Flits about. Back to the new opening gap low. On a Monday with no moves, there's no real clear direction. But I just want to demonstrate the price algorithmically draws to these key levels, and if you haven't got these key levels marked out, then you're never really gonna make it anywhere. Well, I mean, you're never really gonna properly understand price action. So please, as I'm demonstrating, mark these key levels out. Go and have a look at ICT's videos and yeah, have a real understanding of how price moves. But yeah, um, so we take the low, Friday's low, previous day low, draw back to the new day opening gap, but it's just becomes so it's just pretty choppy today. That's what you would expect on a Monday, but you could easily catch a little scalping move. I'd rather be hands off. Um, yeah, so we chop around, close above this new day opening gap. Price draws back towards it. Look, bodily closures on the higher, just mix wicks to the low. And then we just displace back to the fair value gap on Thursday, and then Wednesday's high, as well as these relative equal highs, which should always be on the lookout for. But yeah, that was just a quick summary of price action today. Yeah, catch you for tomorrow. Peace.